Well, don't bother reading that. You don't need to. I'll tell you that I am a farmer as well as an insurance agent, and I'm an independent agent. I work with about 12 different carriers, but in the world of agriculture insurance, we work with mostly 4. Chubb, Travelers, Hartford, Franklin Mutual. Those are the primary ones I work with. Also Great American, 5. So let's talk about life insurance as it relates to farms. And in my first bullet point there, it says, for whom? Because you can use life insurance, obviously, for yourself. If you pass away, and I guarantee you will at some point, it's for your beneficiaries. But in the world of business, because in agriculture we are business, some people forget that, it is real live business, there are partners from time to time. And it might be your spouse, it might be your brother-in-law, it might be your brother, sister, cousin, uncle, or you might be unrelated, but you are business partners. And life insurance can be a vehicle to fund a buy-sell agreement. Typical example. There's me and my partner, let's call him Ed. And we've been working together for 10 years. We've built up our business. It's worth $700,000. He wakes up dead. Now who's my partner? Ed's wife. And I can't stand her. Now I'm in business with her. I'm stuck with her. Now, if we had been good planners, we would have had a buy-sell agreement, which our attorney puts that together so that if either partner dies, the buy-sell agreement says that the surviving partner has the right of first refusal to buy out his heir, the deceased partner. Now, how are you going to come up? In my example, we had a $700,000 farm business, or any business. Where am I going to come up with that money, that $350 that I need to buy out that woman that I can't stand? Well, you use life insurance as a funding vehicle to come up with that money. So life insurance is for you or for the buy-sell. Now, some people may say, well, my company's not worth that much. I'll have enough money to buy her out, or I really like this spouse. I'll have no problem. That's today. Things change. That business might get much more valuable. The spouse may change. You never know. So use life insurance for that buy-sell scenario, especially if there's more than one partner. It could be 3 or 4 partners in your business. So think about that. Next on that list there, it says, how is life insurance premium determined? This may be kind of C-spot run, but I'll go through it. How healthy you are, how young you are, and when's the time to do that? When should you get it? When you're young and when you're healthy. You can get it you can get it when you're old and fat and smoke and in poor health, but it costs a fortune. If you buy it when you're healthy, the premium's going to be much better. I bought my first life insurance policy on me when I was 25 or 26, and I'm enjoying now a very good, inexpensive premium for that $200,000 policy. So start it when you're younger, advise your children, your friends, get it when you're healthy. Because if you're unhealthy, it's going to cost more, or maybe you can't get it at all, so you're kind of stuck. Beneficiaries. Anybody can be your beneficiary. You can split it up. Some people think there can only be one beneficiary. No, you can make it more than one. My next thing here is, what do you do when the bank wants me to have it? And why would that be? For the loan, to help your farm go. And if you get an SBA loan, absolutely guaranteed, got to have it. So don't even go talk to the SBA guy about getting a loan if you don't have life insurance. It's a requirement. And if you need the money sooner than later, you got life insurance, you can't pull it off the shelf. It's not a cheeseburger. Can't drive through and say, hey, can I have a life policy, $100,000 for the SBA loan? It doesn't work that way. We're going to do blood tests, urine tests, go into your medical history, see how you are. So if the bank wants you to have it, you're going to need to go through some of that. And that's the next line under the life insurance is, Well, I have life insurance at my other job. By the way, it's okay if you're in the farm business to have another job. I do. I farm 300 acres. I work it 7 days a week. Obviously, I'm not there right now, but I was there this morning. I'll be there tonight. I do it on the weekends. And during hay season, I don't see a whole lot of this. I'm working in the field. But I have insurance, life insurance for my other job. Well, that may be true, but you don't own it. You're not in control of it. So if you leave that job, all of a sudden that life insurance may or may not be portable. Maybe you can take it with you, maybe not. So I recommend you have your own policy of some size to protect yourself that you can control. And those are usually somewhat limited when you have it through your employer. It may be 1 times your salary, it might be $25,000, it might be $50,000, which is good, but $50,000 in life insurance really doesn't go very far. So I recommend everybody having their own. Now on here I talk about term versus whole life, and I don't want to belabor this. Whole life is fine. And once upon a time, they had great numbers, and there was creating great cash value would build up. It also costs more. Whole life costs more. Term is cheaper, but the downside of that, it's limited. You're buying a chunk of time. Whole life usually goes as long as you're paying the premium. So it depends on your situation. If you have a big need, but not a lot of money to put into it, this is the way to go. And you can convert it. You can always change it from here to there, usually before the age of 65. So when you come to life insurance, there's a number of different ways you can slice and dice that. And the last thing I have on here is a life insurance trust. It depends on your financial situation. You'd be advised by your accountant or your attorney whether you really need to put that life insurance into a trust. That protects it from being part of your estate, so that when you die, Uncle Sam doesn't get his hands into it. We all need to pay taxes, I get it, but we don't need to give the government any more than you absolutely have to. So if you can protect it through a life insurance trust, I recommend that. Okay, now, my particular expertise in all of this stuff is in what we call P&C, property and casualty. And your property is your stuff. And what I mean by stuff, we're talking farms today, right? Yeah. Your stuff could be, shout out a couple examples of property that you need to insure. Tractors, okay, that would be equipment. Okay, anything else?
Is crops what it is, or is that different?
Crops, yep. You're gonna hear about crop a little bit later. We'll put that there. Improvements, like, give me an example. Buildings, thank you. The barn, the greenhouse. Don't you hate that when the guy's writing it always goes down? I can't fix it. I do this once in a while and I still goes down like that. So under property, these are obviously the basics. The big stuff are the buildings. Then it's the equipment. It could be your stock. Tuesday, I was speaking to a group on equine insurance, and we were talking about tack and saddles. It could be the blankets. There's some equine facilities where they have washrooms, wash stalls, and they have all kinds of materials to clean the horses. And that stuff ain't cheap. You can insure that too in case it gets stolen, burns up. Because when that barn goes, and by the way, they usually go. You just try to protect the other barns from going. But when that barn goes, everything that's in it, you might want to protect it. How about our four-legged friends? In the state of New Jersey, you may love them just like your own kids, but animals are considered property, and you can insure them. Sheep, pigs, cows, chickens, horses. Again, I'll go back to the horse thing because it's really easy. Those horses die, whether, I'll get that care custody control in a minute, but those horses die in the barn fire, they can be covered if they're properly listed on your policy. And you can also buy mortality. Mortality is the same as life insurance. Here he goes, writing it down on the slant again. Mortality. Mortality insurance. Again, I'll talk about those horse people. Racehorses can be, well, expensive. Sometimes they can be as low as a $5,000 or $8,000 claimer, and some of them can be $500,000 horses. But you got a huge investment in that animal. You can insure basically life insurance. We like to say mortality because it's an animal. You can insure against that horse waking up dead in the stall, and now you're out the $100,000 or whatever. And included in that can be health insurance for that horse. I haven't seen it too much for smaller animals, but dairy cows and horses you can buy like emergency colic surgery. It's usually limited to $20,000 or $25,000. So that's all under property. Now, one of the things that's not going to be covered on a standard farm policy, oh, by the way, farm policies aren't standard, I'm sorry. They're always a little bit different, but they fit under a general category. But one of the things that's not covered, which I listed on here, is become the most popular event here in New Jersey the last 2 years, and it is, it's on there, flood. And you don't have to have a farm to be concerned about flood insurance. It's not covered. It just ain't. You got to buy a separate flood policy. And a lot of people say, well, I don't live in the flood zone, I don't need it. Maybe you don't. But there were a lot of people last year when Irene rolled through, people in Vermont didn't think they needed a flood policy. And when that tropical depression got up there in the hills of Vermont and just kept pumping water down, it all collected and flooded people out. And guess what? They weren't covered. So if you want coverage for flood, you got to buy it separate. It's its own animal. Remember that it's an exclusion under your standard policy. Also, I listed on here RC versus ACV. Well, RC, we all talk in acronyms. I don't care what industry you're in. Everybody has their own. P&C, RC, ACV. RC is replacement cost. When you insure that barn, you're likely going to want to insure it for replacement costs because you need it. It's a 5,000 square foot steel Morton building. It's 5 years old. If for any reason that goes down in the tornado, I need enough money to rebuild it just the way it was. I need to replace it. So you can insure it for replacement cost. That costs a little bit more than ACV, which is the actual cash value, or an easier way to think of it is depreciated value. That barn burned down or blew away, and it was a 150-year-old wooden structure. They're beautiful. I have a couple of them. But if it ever burned down, am I going to replace it with another old wooden barn with beams like this and cedar shake? And I'd love to, but it's not cost effective. It wouldn't make sense. I could insure it either way. Actual cash value will probably be cheaper for that wooden building. So I can still insure it, but it would be at a depreciated value. So there's two different ways to do that under the property world. Okay, oh, the last thing. Self-insurance I have listed on here. Remember, tractors, who said tractors? Tractors. You can self-insure your own stuff. What's he mean by that? It means you take that risk upon yourself. I have 10 tractors. I did this the other night. My son happened to be with me. He helped me carry some stuff. And I said, I have 9 tractors, but I only insure 2. And he corrected me later, said, Dad, we have 10. I have 1 blue one, 3 red ones, and 6 green ones. I like tractors. And some of them are older, and they all work, but I don't insure them all. I'd be crazy. Couldn't afford to insure them all. So I self-insure some of those lower value tractors. You can do the same thing with your equipment. It might sting if I lose one of those smaller tractors. I could replace it out of pocket. It'll hurt a little bit, but I'm going to take that risk upon myself. I'm going to self-insure. Another part of self-insurance or risk management is having a higher deductible. Now, I'm going to guess everybody here lives indoors and either have your own house or you rent a place, and I hope you have a homeowner's policy or a renter's policy. And on there, that's short for deductible, you have a deductible. Guaranteed there's some kind of deductible on your policy, like your auto policy probably does. If you have a higher deductible, you can save some premium dollars. And that higher deductible is a form of self-insurance. Instead of having a $250 deductible, you might have a $1,000 deductible. It means that first $1,000 comes out of your pocket, not from the insurance company, and for that you get a lower premium. Because you're assuming some of the risk along with the insurance company. So when I talk about self-insurance, how much can you absorb yourself, take that risk upon yourself before you transfer the rest of the risk, pass it off to the insurance company for which you pay a premium for. General liability, that's when, did I put it on here? Yeah. This covers for B, here he goes back to initials again. BI and PD. See? Great notes, isn't it? BI means bodily injury. Because someone's coming and going for the pickup at the CSA, trips and gets hurt. That's bodily injury to others. General liability covers for bodily injury or property damage to others. All right, seems kind of obvious. But you're going to have that policy, that section of your farm policy, to protect you in case you get sued. Little Johnny tripped and broke a tooth. He was going to be starring in the school play. Now he can't because he broke a tooth and never play the piano again, whatever. It's amazing how great Johnny is right after he gets hurt. Or he got hurt, mom couldn't stand him. But he got hurt. You need general liability policy to protect you against that lawsuit. And property damage is other people's stuff. You're moving that tractor around, somebody is, that's working for you, while they're picking up at the CSA and you bump into the car, or you break somebody's stuff. Make up your own examples. When you damage other people's property, you need that general liability policy to protect you if you hurt somebody else, either physically or you hurt their stuff. You start at $1 million. You start at $1 million. Nick heard me say this yesterday. Nobody sues you for $280,000 when little Johnny got hurt. They start at $1 million and go up. And you need to protect yourself. If you can buy liability limits that are less, you can buy it for $500,000. I've seen some for $300,000. But the cost difference between $500,000 and $1 million might be $120. You want to sleep better at night? You buy another $500,000 worth of coverage for $120? Because if you can't afford the general liability premium for $1 million in coverage, you shouldn't be in business anyway. It's just crazy. It's nuts. Just don't do it. Start with at least $1 million. Absolutely. One of the notes on here I forgot to get to is where it says general liability. What kind of farm are you? This will determine the value, the cost of your premium. Be very honest with your agent who you're working with, what you do. Don't say I'm a vegetable farm CSA and that's what you're insured for. Oh, and by the way, I didn't bother telling the agent. We also do pony rides. And we have, we're a boarding facility and we keep stallions. If anybody knows anything about stallions, I hate stallions because they're always unhappy. And then I'm being recorded, so I have to be careful. Stallions are always in a bad mood. So what I'm getting at is, if you have a claim because of the pony ride thing, they go, whoa, wait a minute. I thought you were in the vegetable CSA business. They may not cover that claim because you didn't tell us what you're doing. Just be honest. No sense paying for insurance if you can't use it. Be honest with what you're doing so you can be properly covered, and start at $1 million because that's where the lawsuits start. Now, the other neat thing about the general liability policy, you can be 100% right. little Jimmy was running when he tripped and his shoes were untied, whatever it might be, and you weren't negligent at all, you want to know that there's defense, because attorneys ain't cheap. You got to stand in front of the judge and defend yourself. You want that attorney to be paid by the insurance company, not coming out of your pocket, because it's somewhere around $450 an hour, and those hours click really fast. So part of that general liability coverage is that defense cost. Next thing there on my list, I say excess liability. Anybody know what the common term is for that? As he writes it on the board. That's your umbrella policy. You've heard of that before. It's another layer. You start there. Absolutely start at $1 million. And then get a quote for your umbrella. Find out how much it's going to cost for another $1 million or another $2 million. It might be as little as $300, maybe $500. It depends on what you're doing. But find out what it is for another $1 million in liability. Think about it as layers of insulation in your attic. You had that first 6 inches of pink stuff to keep your house warm. Well, some folks add another 8 inches. I live in an old house that sucks a lot of oil. So I put another 8 inches of where I could get it. You know how the roof gets too low and you can't get in there? Another 8 inches of insulation to keep. That's what the umbrella acts as, is another layer of liability coverage. Find out how much it's going to cost to get yourself an umbrella policy. At least you'll be well informed. If you don't buy it, you don't buy it, but find out. Because for another $300, you get another $1 million in coverage, you sleep better at night. Other people using your farm and their liability. Somebody's renting your ground. And whether they're crop farming, vegetables, horses, whatever, they're using your property. You want to make sure that they have at least $1 million. There should be a contract between you and the other farmer or whoever it might be. Make sure they're covered. And then you want their policy to extend to you. In case they screw up and you get named because you own the ground, you don't want to affect your insurance. You want it to land on their insurance. So make sure you get named as an additional insured. We say AI in the big old world of insurance. Make sure that you are named as an additional insured on your certificate of insurance you get from them. You want to share in his insurance if they screw up and you get named because you just happen to own the policy, on the farm rather. And the next and the last piece is when you use somebody else's farm. It's in this lady who's leasing ground and running her operation. I'm confident in that lease you had to supply, I hope, if it was done right, that you're supplying your landlord with a certificate showing your levels of insurance and that you name them as an additional insured. Naming somebody as additional insured generally doesn't cost a thing, maybe $50, depends on the company. But when you're using somebody else's land, you need to, if the lease is done right, they're going to want to see that you have current policy and at, hopefully, they're saying for at least $1 million in limits. That sounds like a lot, but it's an industry standard that's at the bottom. They all go up from there. We have some requests all the time for, well, they won't let me in the building unless I have $5 million of insurance. And they got $1 million. So I got to come up with an umbrella for $4 million. And it happens all the time because attorneys are saying, don't work with that guy unless you have at least this level of insurance. Sounds like a lot, but the industry is pushing for higher levels.